Oh, good evening, traders. It's Mark here from the day trading room. Time is 20 past 9 on Wednesday, the 18th of May 2011. Very, very few trades for me today. In fact, one trade. I just don't like these grind days. It was a very small trade of the open for me. It was a nothing. It was 3 and 8. I think it was almost a scratch basically. Pretty much based on the fact that we just pushed down so quick, and I saw a take buy. I think it was at 42. Yeah, 42, and jumped in and just popped up. So nothing. Don't want to get involved in talking about that. That was just something and nothing. But generally, the day was difficult because I don't like these grinding trend days. I really don't like them. They're not my thing. Never have been. If you've looked at any of the videos, you know that I just like to sit back on these days. And really, I should probably just go. But I thought we are going to get a little bit of a drift. I thought we were going to perhaps do this trend situation, and then when the FOMC came out at 7 o'clock London time, I thought perhaps we'd get some spice then. So after the initial trade, initial scalp, I left it. I sat with it. I didn't sit with any trade. I just sat with it, as in I just sat here watching. 7 o'clock came. It was just nothing, nothing. I mean, I was tempted. I was just saying, earlier, if you had to put a gun to my head, I would expect that to drift down from there because of just no more buying. But it could have easily drifted further up. There was no edge for me at all. Not part of my setup. I didn't consider that a reprice because it was down and up and down. It was just rubbish trade. It was just I just didn't feel like there was anything to do there. So I left it, and I'm pleased I did. I'm pleased I did because you can get caught up in all sorts of rubbish and trying to work your way out of things. And I just it's not my thing. Leave it alone. I'll come in tomorrow and ready to give it a good go tomorrow. So yeah, one trade for me today, very small winner. Yesterday a little bit more active. A good day actually, a good day. I'm just circling the things here that I should have got, and I'll explain why I should have got those later. It's not just a case of it was a swing high. Yeah, you should have got that. But here we are, a few scalps off the open. I think it's probably clearer if I bring in the Dow cash and the overnight. So hopefully you can see that. This is 24-hour. Let's move this in. This is what I drew. There we go. Yeah, that's right. I took a little trade pre-market. I don't normally do that, so size was reduced accordingly. Um, but I spotted this. We'd driven down. This was on Tuesday, by the way. Driven down from the sort of midday push London time. Now we were getting this thing, and I just noticed this pattern actually. 33 to 40 point drives with volume spikes, 20 point pullbacks. 30 to 40 point drives, volume spike, pullback. So then when we got this drive, watching the S&P as well for this just before the open, and I saw the wick, the risk was quantified. I thought, okay, I'll have a crack at that. I'll have a long there, and I'm gonna stop there, and I'll look to scale out as soon as we get 20 points off that low. So it worked out to be like a 13. That was just me looking at the overnight trade as I do and trying to gauge how I was going to play the open. And I thought, actually, okay, the open looks like if I push lower, it may well be bought because that seems to be the pattern, and we are quite stretched out. I mean, the high here was 25.50. It's 100 points move in a couple of hours. For overnight, that's pretty good. There's some sort of unwinding expected. Now, I'm not going to base a trade just on that. But seeing these little patterns and picking up things, and then obviously that worked out fine. That was a good trade. And so I did the same at the open. We got the push lower. I waited for that wick on the 1 minute. I don't know if you can see that very well. I waited for that wick on the 1 minute, and then I'm in. Scaling out pretty aggressively actually. 40, 41. It was an average of about 8 ticks over the scale, so nothing great. And in hindsight, I think because we didn't pop up and start. I mean, the idea was obviously for us to do that, for us to wick lower, and then to see strength come in and just drive up and fill that range. That was the idea. And actually, this was the second trade I did. I had so three goes in total, including the overnight or the pre-market. The wick, the drive up, the wick, the drive up, and it doesn't look like a lot, but these are they're 20 point chunks, so good little trades these. And actually, the S&P had filled its range, so even though I was looking for the Dow to do the same, because the S&P filled its range at this point here, it was. I'd already scaled out and reduced my risk completely. And actually, I remember now, this was a good scale for profit. And this one came back and I ended up scaling that at break even because I wanted to reduce some of the risk. I wanted to take another batch off just in case, because you know, it wasn't fantastic. I don't think it was fantastic, but I felt I had a reasonable read on it, so I was happy to take it. But then when it popped up, pulled back, and I still had quite a big position, and I thought, okay, let's reduce that risk. So reduce the risk, and then we finally got the pop up, and the S&P filled the range. So it just made sense to take it all off there. And I put a little circle here. Was why did I miss this short? This is. I actually said before the open two things. I'm either going to buy the wicks for a pop back up, and they are scalp onlys, or the larger trade is going to be wait for the counter trend move upwards because we're opening outside of the range. You've seen that. You've seen me do that before. There's the low, a prior day's low. We're opening around here, waiting for the sort of counter trend move and then the drive. That's a pretty good setup normally, but just because the overnight behaviour, because we'd stretched so far, I favoured that for a scalp. But I sort of forgot about that I was doing that. I put some cash in the bank, and I kind of forgot about what I was really looking for. And this was a real gift. I don't regret stuff, and I don't like to dwell on things, but I like to look over so I can improve my performance. That's what this is about. And look here, 12,500 on the cash. That's the Tuesday, by the way. I marked on Tuesday. There's those little dips. Pull back up. It's just perfect. The high is 12,500 on the button, and there's a 40-point move in that. Now you're not going to get all of that. Don't get me wrong. You're not going to get the full 40, but you're going to get a good chunk because it happens so quickly. And I know as it starts to roll, when you see that, you did the highest tick, and then you see even if you're late in on that good tick lower there, your risk is nicely quantified. It's worth a shot. That's a weak push really if you look at it, and really the open's still there. So in real terms, it's rubbish. It's rubbish for the Bulls. They're really struggling to fill that gap. So anyway, that's what happened. I missed that, and that rolled over. So, but got to be on the ball with those. Got to be on the ball with the larger premise. And then this is just a nice little textbook thing. First tick pullback, guys. Talk about ticks before. That was the level. You see that there? That was the level we broke. Just started to really wind down into some action. Let's put this onto you see it quite nice on the 5 here. Just started to wind down into some really lovely selling. Really started to pick up volume, picking up low ticks. Great. First tick pullback. Oh, it worked a charm. Back to zero. There's a zero line on the ticks. It's to the tick. I'm not saying ticks again, but it's almost to the tick. It was a great entry that to zero. Perfect. Rolled over. And I'm taking good profits out of that. I'm taking good moves. 15 ticks. Then a nice 20 something ticks on the low tick reading. So really using the ticks as a great tool to guide me there. I know I've got the momentum behind me. I know people are trapped in that. I know by the nature of the day, people are already trapped because we've gapped down out of the range. We're in that sort of environment. It's out of a range that's been the low for the past week. If you look on a 60, I won't bother bringing it up, but you'll know if you're trading it. So there's a lot of people trapped. A lot of people on hope mode here. You've got the little push up, and then when you start breaking these lows, and there's force, wait for that pullback, bang, I'm in. Great trade, really nicely rewarded for that, and that because I've moved it, the arrows moved, but the final scale on was on the low tick reading, and this is only circled because that should have been a nice little buy really. It was 12,400 cash again. I like using this cash, but I think if I hadn't taken the short, I'd have definitely taken the long because that's my cup of tea as well. Where's the low? 12,400, 100 and something point drive, slight lower low, not really. Ticks not participating. Should have been all over that. Especially for a move back to that, to some sort of high tick reading, 500s, 300s, or even to that last high. That's a bread and butter trade for me. But I got the short, so I was happy. But no reason not to take that. No reason not to take that at all. And then again, this I'd banked for the day. Then I'd said, okay, I've had a really good day. Pleased with that. No losers. A bit scrabbly around here, but also so far so good. And I didn't take this VWAP trade either. Nice counter trend move up. We're in the overbought condition, first time for a while. Not really a trend day, I guess it is, but not really. But the VWAP was there, held to the tick, and high tick reading as well. and rolled over. Too many things against it for my liking. So don't feel too bad about not taking that. We've been overbought for a while. Not really a trend day. We'd flushed lower, taken out a few stops perhaps. That was under the 10,000, 12,400 cash. Longish counter trend rally, even though the volume was low. But it just seemed to trigger off a bit of selling, should I say? The view up was there, and off we went. So yeah, that was that. And Monday was another day off for me. Guess that's the beauty of being a trader. You can take days off and get on with other things that you need to do. Spend time with the family, which is obviously the important things in life. So yeah, great. I can't complain. Today disappointing, but if I take one trade and I make a couple of ticks and pays for my lunch, then pays for my lunch, then I'm happy. I'd rather do that than get caught up in stuff. I just know it's not my thing. Trend days. You've seen me talk about it before. I don't even try to say I know how to trade. I do know how to trade them. You wait for the pullback and you get in, but there wasn't a pullback deep enough. I don't like them. I like to be able to get out on the first impulse. You'll notice that my trades are based a lot on that sort of wholesale. Can you say wholesale entry if you like? And then that initial pulse, I like to take off the risk off the table, then look for a further move. So trend moves are grinding. I don't get that. I just don't enjoy them. And I'm not very good at trading them. So you know what? Stay clear. We can't be a master of all trades. We really can't. By the way, webinar, great, good response to that. Emails coming in. I've got your emails. You won't mind if I keep those and reply to those in the webinar. It will be recorded, so if you can't make it, great. I'll record it, stick it on the blog, and so keep firing the emails, keep firing the questions. Got some great stuff to talk about. Really looking forward to it. Got some fundamental stuff. Just got to keep reminding ourselves of the fundamentals, and we've got some nice advanced stuff as well. So should be a great little webinar. That I'm looking forward to doing that for everyone's benefit, including mine. So fantastic. Oh, one more thing before I go, I want to talk about today's little pop here. I had this rectangle in. I was interested in that because that was the range fill. If you're wondering why that was on there. And I was hoping perhaps we'd get that early on, but it turned into a grind trend day, so I didn't take it. But anyway, good trading, guys. As always, number one thing: manage your risk. Nothing else matters in the world of trading apart from managing your risk. Because if you manage your risk, you've got the time. You buy your time, everything starts to fall into place. Things can start making more sense. Start making more profitable trades. Get to become the trader that you want to be, get to have the level of trading that you want to be. Number one thing I always thinking about is my risk. It's my risk. The very second you stop thinking about risk, the day the market will bite you. Just remember that and keep that risk managed, and you stay safe out there, guys. That's the most important thing in this game. So good trading, guys. I shall be back with another video, I should think, perhaps at the weekend by now, because we're Thursday, Friday, so probably Thursday, Friday review. I think I'll be on Thursday and Friday trading. Don't expect not to be. So assuming I'm in and trading, I shall have a video up for you at the weekend. Good trading, guys. Bye-bye.